Well, welcome to Good Ideas. It's from your pals at iDiz Incorporated. My name is Brian Ringer. I'm a wordsmith and big idea guy here at iDiz. And with Good Ideas, we're starting from the idea that credit unions do a lot of good in the world. Plus, they're also a strong and sustainable business model. So we're exploring good ideas, both inside and outside the credit union world, that can do a lot of good while also being good business. And today, I have the high honor, the privilege of speaking with. I'm going to call you the credit union warrior, Denise Wymore.
Sorry, Matt Davis. Matt Davis was a sea warrior, but he's actually
that's
left
right.
the credit union movement, so I get to be that now. So
You get to be the
all good.
warrior. I thought about warrior queen, warrior princess, but we just stuck with warrior.
I like it.
And I know you said something about cheerleader on your LinkedIn profile, but no, I think
Yes.
I think we need to go a little hardcore here. And then Denise has been, passionate within the credit union movement since she started as a teller, and has just been a force of nature ever since, in a lot of different roles. And I'm not going to try to list every one of them. And Denise, I hope that wasn't too much hype.
No. I do love me some credit unions. 41 years this year.
Oh, okay. Well, I didn't want to say the word, the years,
okay.
but
I'm happy to age.
Yeah. And you're currently working with QCash Financial, and it's a QSO that is doing some really amazing work with financial inclusion is kind of the big umbrella that's under, or connecting credit unions and people to the people who need them most. And I'm sure we'll hear more about QCash and so forth. Now, Denise and I have done a lot of blogging and writing and thinking in the credit union space, and we've had parallel thoughts and many times. There's something kind of new that I didn't know much about, which is de novo credit unions, new credit unions starting from scratch. Not even something I'd thought about for a long time. And Denise is doing some exciting work with de novo credit unions. Yes, they're still needed. Yes, they can still happen. And yes, there's something that everybody should support. So, Denise, I guess I'll turn it over to you. Tell us about de novo credit unions, and tell us, what you're up to, and what's next.
Well, I'll tell you, it's interesting because I didn't really give much thought to de novos either until I think it was about 3 years ago when I was with Nick QSO, and Randy Carnes, who is the CEO of CU Answers, talked to Jack Antonini, the CEO of Nick QSO, and at our annual kind of planning powwow about what he calls the QSO Challenge. There's actually a website, qsochallenge.org. And in there, he has 5 initiatives, but one of them was de novos. And if I had to Google de novo. I didn't know what that meant. And so I'm like, oh, brand new credit unions. Huh, interesting. And then I heard him say at a underground conference that in any industry where there are no new entrants and there is a consolidation of the existing companies, that signals the beginning of the end of that industry. And that was like cold water in my face. I was like, oh my gosh, we're merging, I think, at more than one a day. Last year, we started one credit union. This year, there's been, I think, 2 chartered. And it's true. I mean, you do the math on it, and we are going to disappear. If credit unions go away, QSOs go away, trade associations are already consolidating, trades go away. It's not good for anyone, right? It's absolutely not good for anyone. And yet, why isn't it more of a discussion? So I set out to do a bunch of interviews. I just wanted to know why aren't there any credit unions? And so I interviewed people who tried and failed, who tried and just bailed, gave up, and the few that actually made it. And I kind of, cracked the code on what was the issue. And there's several, but, first of all, there's not a single trade association or group today that anyone can turn to. The state leagues don't do it anymore. CUNA doesn't. Filene never, really wasn't really their job. It's not the NCUA's job to start new credit unions. It's their job to, approve the charters and to regulate them and to provide the insurance. But it's kind of a, what is it, like a supply and demand? There aren't that many de novos that are trying to start for anyone to say, oh gosh, we should really like hire a person to make this a department. And that's one of the big hurdles. Okay. And so then the other hurdle, of course, was the NCUA process was very confusing, laborious, just getting the charter definition, it was difficult. And then the third and the biggest hurdle for so many credit unions to overcome is they need about $1 million worth of capital to even, uh, so NCUA will even allow them to open the doors. And $1 million is a lot of money. And a lot of these credit unions have to get it the old fashioned way by fundraising. So the few of the credit unions that I talked to that actually did get chartered, it wasn't unusual to hear that the process was anywhere from 3 to 8 years for them to get chartered. It was nuts. And then some of the other things that I heard in my interviews that were stunning to me, and no surprise on this one, but a lot of credit union CEOs that they reached out to kind of for mentoring and guidance and, perhaps some help, they all pretty much said the same thing, like, well, we would love to take you in as a select employee group. We'd be happy to serve your group as a SEG. But the groups that I'm currently working with, they're very specific, and they don't feel like they would get the attention or really be able to build the affinity and that common bond by just being a SEG of $1 billion credit union. It doesn't make sense. And then there were even a few CEOs that said the unthinkable, which was, why would I want more competition? Why would I want to start new credit unions? And why would I want competition? And I thought, wow, that was stunning for me to think that had somehow we've gone from being, a financial cooperative to let's not build anymore so that I can get bigger. Right? It seems very kind of selfish and professionally unsavory, shall we say?
Yeah. 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 And as you've mentioned, it's a little bit of a departure from what the beginnings of the movement are, and the beginnings of the credit union movement are, there's nothing old fashioned there. It's all still valid. It's all still relevant. It's all still very much needed. And yeah, there in a lot of it, there seems to have been sort of this divergence into into kind of the profit motive rather than the doing good and motive. And it's not universal. It's not everywhere. But yeah, it is an interesting, or not. It's not interesting. It's something that's happened, and
Mhm.
and then there are people like you going, hey, hey, back here, this is who we are.
This is what we're supposed to be doing. And the groups that I've been working with, so I actually met some of these people through Juan Fernandez. He's the new CEO of the Credit Union Association in Mexico. But he started this last year during the virtual JAC, he started a group called the Unscripted Happy Hour.
Mm-hmm.
And Juan is a cool guy, and he knows all the cool people. And so I got invited to that. And in my very first, it was unscripted, right? And so my very first one that I attended, we would get into these breakout rooms and just kind of talk about whatever we wanted to talk about. And so just for fun, I brought up, hey, how about we start new credit unions? And it was amazing because there were a couple people in that group that were already like thinking about it or kind of in the early stages. But I got many of them fired up about just the whole cause of it. And again, they couldn't believe, that this isn't happening. So many people just don't realize that we're not starting new credit unions. So it's evolved into now every other Wednesday. We have it tonight. We're calling it the De Novo Support Group. We don't have a better name yet, but we have a group of people who meet every other Wednesday. We meet after work because they're all volunteering their time. But the three groups that are trying to form in this group is the LGBTQ Nirvana Credit Union, is what they're calling it.
Wow.
Yeah, and then historically Black colleges. Gary Perez at USC Credit Union has a real passion for getting a historically Black college credit union, like a national type of a charter. And then this other one is previously incarcerated people and their families. And I've learned so much from these three groups. And again, getting back to the whole SEG idea, these aren't SEGs. These are common bond good old-fashioned people helping people, credit union, that bond, that common bond that so much of it is lost with community charters now. But when you are truly in the same situation, right? If you can have
Hmm.
that affinity, you can identify with the needs. Like, let's say, the previously incarcerated. I learned so much about what a vicious cycle that is when they get out of prison and how they can't get a driver's license, they can't get a job, they can't get a bank account, and why are they usually end up, not all, but many end up going back into the system because they can't get basic services. And so to start a credit union like that is amazing. And so then what happened is this all evolved, and I have the honor of teaching at Southeast Regional Credit Union Management School at University of Georgia. I teach all 3 years, and I worked with Tom McWilliams of Mississippi League and Craig Percy, who's like the dean of the school, and I was telling him about this group. And so this year, my first year curriculum, they let me completely change it. I brought up all to about educating them about the de novo problem, right? I began with laying out the statistics and that we're disappearing. And then just for fun, I asked these first year students, how many credit unions do you think are being chartered in a year on average? And it was amazing. The lowest number they put was 5, and some of them were saying, 20 or 30. And that was an eye opener because I thought, I bet a lot of people think, oh, yeah, credit unions are still getting formed, right? And they're not.
Yeah.
They're absolutely not. And so then each one of these groups got to present their case. And the first year project is normally just looking at their credit union and looking at their history and doing financial projections and on and on. So, what they added to the first year project was kind of that revelation of, if you were to start your credit union over today, what would you do differently?
It's a powerful
Right. And
question. I love that. Yeah.
yeah. And so it was really kind of an honor that they allowed that to happen. We're going to build on it, over the years. But this group is really dedicated. Our real mission right now, I'll tell you, is we need a clubhouse. That's the best way I can just describe it. We need like an online community, like CUNA Councils has a really good online community. QSnet uses the same software where it's like a private community. You got to be invited in, but there's document sharing, there's a mentoring thing baked into it. Um, it's where people can almost like go and register and say, I am on this journey, right? And we want to build like a clear path to charter, right? And we've actually been working with the NCUA. They've been really cooperative. They're very, very committed in making it easier. And so they've been wonderful. And we want to, though, have a clear, easy path where people can go to an online community, find like minded people who are willing to help, but we don't have it. And as Sam Brownell, CU Collaborate, he's part of the De Novo support group. He was talking the other day about a very small credit union that reached out to him that was struggling and needed some help. And he said, I know there are resources. We know all the resources now. We know where people can get help, who specializes in what. We know all those things. But as Sam said, it's not Googleable. So that's a new word. It's not Googleable. And it's not. And so when
Yeah.
someone says, start a new credit union, or business models for new credit, any of that isn't Googleable. But if we had a central place where we could put all of this, then we're really looking at it being the sixth cooperative principle, volunteerism, cooperation among cooperatives, right? It doesn't have to be like a business so much as it is truly a new movement and what we're calling a growth engine. We want to create a growth engine for the future. And getting back to Randy Carnes has always, I don't know always, but for a long time, donated CU Answers core processing services, all the services that CU Answers offers for free to a de novo for, I think it's 2 or 3 years, with the caveat that they sign a contract. But he's really paved the way for, a credit union service organization of saying, we need to give back. And I know that's part of the QSO challenge, and QSO is still working on that, is getting QSOs together to help de novos overcome one of the biggest hurdles, which is financial, when it comes to offering, you know, having a good website, having a good core processor, just the basics, right? It's super hard.
Hmm.
And then the other thing I learned from a lot of these groups, I learned this from a conversation with the NCUA. They said, these people come in well intentioned, but they come from these industries and they are passionate about the people helping people financial cooperative model, and yet they don't have any experience running a credit union. So the heavy lift for them is writing a loan policy. I mean, it's really like they've never done it. This
Yeah.
isn't something that they can do. We do it all day long, right? I mean, and one of the Clean Energy Credit Union, which is one of the few that got started, the gentleman that I talked to from that credit union just offered. He said, "We want to give all of our policies, procedures, everything that we had to complete for the NCUA to get open is pretty much boilerplate, right? For a startup credit union, it's not that different." And he said, "We'd be happy to share those materials, but it's not Googleable, right? Where are those things? I can get them to people, but wouldn't it be better if we had a storefront where people could go in and say, okay, I need help." And are all the new credit unions going to succeed? No. And I had a great conversation with someone at NCUA that said it really well. If we are so strict that we are afraid that a credit union is going to fail, then we probably won't start any new ones, because of course some will fail. Of course they will, but many will succeed, and we need
Mhm.
to give them all a chance, right?
That's an amazing thing to hear from the government.
Yeah. Well, there's some really, Rodney Hood is really committed. Kyle Hauptman is really committed. They said it at the GAC. It shouldn't take, 8 years. I don't know if you heard Kyle. He's from the state of Maine, and I guess the last new credit union that started in the state of Maine took 8 years. And he said, "I know things move slow up here, but they shouldn't move that slow." And so
Yeah,
he's super committed, and they've actually been really nice to work with.
that's great. Yeah, I remember being shocked a long time ago when I was at a conference, and anyway, one of the speakers was an NCUA examiner, and we thought it was going to be basically hearing from the cops or something like that. But it was really enlightening, um, that his job was to help, make the movement a success, as to help people succeed, help credit unions succeed. Um, and even when they need to take over, running a credit union and make changes and so forth, the first thing they start doing is helping them figure out marketing and making loans, and start getting the engine running again. So there was an eye opener. Like, oh, these aren't the scary people that the VPs are afraid of.
Yeah,
They
there's
want
some really
to.
they want to
Yeah,
help. There's some good humans there. And, the
yeah,
other thing that we're really concerned about with our de novo, when we've had two very small credit unions now work with us that need help. And for all intents and purposes, one of them really is a de novo, and that they just have basic services, and they need to grow, right? And we look at some of these small ones. Oh, I get so angry when everybody dismisses a credit union merely by asset size, right? That if you're not a certain asset size, you're not going to make it. I will argue that till I am blue in the face, because I know so many CEOs of small credit unions in communities where they are doing the Lord's work, right? They know their members, they're helping their members. I started my career in a small credit union, so I will always see the power of that common bond, the power of truly knowing your members, listening to their stories, giving them opportunities, having them pay back loans early, the loyalty that was built in there. It's just, I mean, I get all choked up sometimes when I think about some of the work that I've been blessed to do in my career, and the fact that we can't lose that, because if we disappear, what are the options for a lot of Americans? What are the options? Wells Fargo's not going to help them. Bank of
yeah,
America's not going to help them. And so, especially in the wake of COVID and the pandemic, and I think now more than ever, the financial cooperative model is going to resonate with groups, again, with that common bond, that truly are going to benefit from working together, helping one another, um, rather than just being at the mercy of what they currently have, payday lenders and check cashing, and all that.
yeah,
Speaking of that, I have to do my little segue to QCash and tell you why I went to work there, because
yeah,
QCash Financial, it's a Q, so it's wholly owned by Washington State Employees Credit Union. I've known about it since I heard about it through Filene Research Institute, and I did see Ben Morales, the original founder, I guess you'd say, of QCash. He presented at the NCUSO Next Big Idea competition. He was one of the finalists, so I knew a bit about it. I knew their mission. They were very mission driven. And what they provide is they have a small dollar lending platform that is fully automated, and in 6 clicks and 60 seconds, a member can get money they need when they have like a financial emergency, right? And some credit unions do these small dollar loans, but they do a manual. And so about half the loans they approve actually get funded because people are dealing with an emergency, not when the branch is open. But the real key about QCash Financials, they don't use FICO to score. And we become, FICO is the law, right? FICO is the Bible. FICO drives all our credit decisions, and yet FICO has a disparate impact on minorities, and a lot of people cannot qualify for a loan under current, guidelines. So instead of FICO, we look at the member relationship. Can you imagine? We actually integrate with their core. We look at how long they've been a member, what services have they had, are they a member in good standing? ACH deposit is proxy for income. And we do it the old-fashioned way, kind of a character capacity collateral. We look at the human being and their membership. And so I couldn't say no to that. And then the CDFI Rapid Response Program grants came out. A record number of credit unions got grant money, and that grant money covers the cost of implementation and possible loan losses for the QCash product, because they see that that is a tool for financial inclusion, which I know is a huge mission for credit unions right now, as it should have always been, but even more so now, of really serving the underserved. Look at the banking deserts that are out there. It's large banks are pulling out of small communities because they're not profitable. That's where credit unions need to be, right? And that's where I see
Yeah.
de novos as a real opportunity. I read about one today. I posted it on LinkedIn. There's a tribe that is there was a CDFI grant that went to this tribe, and now that tribe has seen the wisdom in actually starting their own credit union. And their field of membership has been approved by the NCUA, but now they're in the hurdle of raising capital, right? And so they need that
Yeah.
capital. But I posted on LinkedIn, so go check it out. There's a great video about it. And this is another de novo. That's not going to be served well as a SEG, right? It's Native
Yeah.
Americans. And they are
Yeah.
very, very, I live on a Pueblo, actually. I live in the Cochiti Pueblo in New Mexico. And it's a very strong family with a rich tradition. And they do struggle financially, many of them. And the credit union model is perfect. People helping people.
Yeah.
It's perfect for them.
Yeah. And with all these, and yeah, anyway, boy, I've got questions. Anyway, with all these, yeah, one of the common threads is, and one of the things that's very important to keep in mind is this is also good business. This is sustainable. Nobody's asking anybody to, like you kind of have to make a leap of faith to get the capital together, to get going, and so forth. I guess some people have to do that, and institutions, and there's different sources there, but serving the underserved, finding a way to make loans that are better for people than payday lending or whatever, or the title loans and so forth. Those can also be very good business. They can do a lot of good and at the same time be good business. And that's what's really interesting. And de novos they're like a little scalpel. They can do things and have such, they can do things and go deeper into people's, and have a much stronger connection than, SEG number 387.
Right.
Yeah. I mean, I literally have seen credit unions with close to 400 SEGs. How close can they be?
Right. And I worked at a credit union where I think when I came on board, they had like 580 SEGs. And
Yeah.
one of the first weeks I walked into the CEO's office and I said, "So what's the goal? And do we win a prize? What's the goal?" Because it felt like we were just going out there tagging deer. It's what I said. We go out there, tag a deer, right? Mine,
Yeah.
mine, 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 mine. And so Julie Ferguson, I don't know if you know her, you should definitely interview her, but she worked with me at First Tech Credit Union many years ago, and she's carved a really good niche for herself in business development consulting for credit unions. And she is a purist when it comes to select employee groups, because she was around when they were brand new and knew the power of kind of creating a credit union within a credit union. Right? Ideally, if a SEG is big enough and different enough that you would truly treat it like a credit union within a credit union. And that's one of the ideas for de novos too. I know that Jim Blaine at State Employees Credit Union, he did that. He helped, I think it was like 3 credit unions start. Chip Filson just talked about that on his blog, Just a Member. If you don't subscribe to Chip Filson's Just a Member blog, you need to. Everybody listening to this needs to. But he
I
talks
have,
about
yeah.
that. Yeah, and I mean he's amazing. And that's another idea is, I mean, it's a bit complicated. I think it depends on what kind of core you're on, but he created the credit union within a credit union until they were sustainable, right?
Yeah.
Like almost like adopting them. And I think I heard Baxter Credit Union um, merged with Target or took Target employees in, but they are like a sub brand of Baxter Credit Union. So they didn't, Baxter's pharmaceutical, Target's Target. And so from a marketing perspective, that's brilliant, right? Let them keep their affinity, let them keep their common
Hmm.
bond. And I think the more that we can do that, the better off we are. Because so many credit unions, when they were allowed to go more broad with community charter, lives, works, worships in 100 counties, they just threw this giant net out and said, let's get as many people as we can. And then everybody changed their name to these generic names. And, it killed me. I've written a lot about this over the years, but it killed me to
Yeah.
see, really venerable brands get kind of bastardized with almost a pharmaceutical sounding name, these synthesized names. And it's just like, whenever I go to an event or I'm, read something about someone, the first thing I do is go look at their about us. Like, who were you? I know you're generic credit union now, but who were you? What
Hmm.
was your story? Because those stories need to be told, and they're all beautiful. This upstart credit union stories are just lovely, lovely to read.
Yeah. I think we were talking earlier about, everybody's got the cigar box story, when they, I've, I've heard several cigar box. So, oh yeah, we started in a cigar box in the cash and it was in the closet or the locked drawer and it was
The
totally
kitchen,
illegal, but we didn't know it. Yeah. That kind of
yeah.
thing, or we, they loaned money to each other and just to get started and didn't realize that wasn't quite right. But yeah, there's a
Well, and
lot of those
there's that.
really wonderful stories like that.
Well, the great thing about the cigar story, though, if you think back to, because I know several of them, and I don't know why it was always a cigar box, but um, there wasn't really anything illegal about it. In fact, there's nothing to preclude a group of people today forming their own credit union, right, in
Mhm.
a cigar box, and it was trust. Right? It was
Yeah.
totally trust. And they had a paper ledger. There were no computers back then, right? They had a paper ledger. They wrote receipts to one another.
Hmm.
They kept the books. There was no insurance back then.
Yeah.
There wasn't any of that. And it was amazing because people could do that today. They absolutely could do that. And they wouldn't be insured. They would have to trust one another. When I was describing the concept of a credit union to a friend of mine, he was a graphic designer and really talented, and I wanted him to work on this project. And he goes, first of all, you got to explain to me. He goes, I don't know. I don't even understand what this credit union thing is. Explain it to me. So I'm explaining it to him. And he said the most brilliant thing. He said, oh, so it's like borrowing from your coworkers or your neighbors or your family, only in a less awkward way.
Yeah.
Nailed it, right? That's the
Yeah.
purest form of a credit union.
Yep.
Nailed it.
It's less awkward. That's the main thing. Yeah.
Well, when I worked at that small credit union that I told you that I worked at, $4 million in assets, and it was we were in the front of someone's house, right? And we were across the street from the truck shop, and we knew everybody. Somebody. Our whole thing was a member would walk across the road to come, to the branch to the house on their break, and we'd see them, and all the account numbers were on a Rolodex. God forbid we lost a card. It was hilarious. So we typed them on a Rolodex, and we see Joe come in, and we get his account pulled up because we knew just first thing he wanted was his balance. Take out $5 for lunch or whatever.
Yeah.
But when they would get loans, we actually said, okay, now Joe, congratulations on your truck loan, and you're excited for this, but we need you to pay us back because your coworkers loaned you this money. We said that back then. So you need to pay it back because this is your coworker's money that you just borrowed. And it was beautiful. And then if somebody got behind on their payments, we'd pop their card, we'd put it front and center right in front of the house, and everybody knew whose car it was or whose truck it was. And suddenly those delinquent payments started coming back in again. But it was
Yeah.
such a family, and it was just such a cool, I'm so grateful that I got to experience that. and that's
Yeah.
what de novos are going to feel like.
Yeah. And that's something that can be, it can scale, it can scale up.
Absolutely.
Um,
Hmm.
and you talked about Jim Blaine. You're incredibly good at name dropping, which I'm not. But anyway,
Oh,
uh,
I was a big fan of his.
yeah, CQ was how many $1 billion credit union, but there's
Yeah.
so many things that were just like that, where it was still a community. It was still people helping people and so forth. So
And even after he retired, it still is. It's really neat.
yeah,
He's got such a strong culture and value system just baked into the DNA of that credit union that, they haven't missed a
yeah,
beat as far as their purpose.
yeah. When I heard him talking about, bring us your mama, or I think it was bring us your mama or send us your mama.
Yeah.
I'm like, okay, that's the
He
most.
was at the water cooler. I think that he was at
Yeah,
that water
he
cooler.
was at the
Yeah.
water cooler, and
Oh
I
my
vividly
gosh.
remember
Yeah.
that. Yeah,
It was so
and
amazing. Hmm.
yeah, send us your mama,
Send us your mama because that's how good we are. We'll take
and
care of
then
your mama.
he talked about, well, I don't spend a dime on marketing, and then he talked about all the things they do that sure smell like marketing, but anyway, I get the idea.
Advertising. He doesn't spend
Yeah,
money on advertising. He doesn't need to. It's word of mouth, which,
yeah,
that was my whole thing in 41 years. I started in 1980, and very few credit unions had a marketing department. We didn't need it. The marketing department at that $4 million credit union was the HR. When a new employee went to work, it was United Grocers Credit Union. When a new employee went to work at United Grocers on their first day, they're sitting with HR. HR would tell them to go to the credit union and open up their account because that's where their direct deposit was going. It was like, you didn't have to market. I mean, it was
yeah,
that tight.
yeah,
We really had to start marketing, advertising, and when we lost the sponsor, and some of them the sponsors definitely went away. I mean, I get that, but there were many credit unions that I say kind of cheated on their sponsor that was perfectly viable and created a community charter, had to drop the name. You know who you
yeah,
are.
yeah, yeah. That's happened a lot. I wanted to go back to something you'd kind of like. One of the things I think is a really interesting idea is the idea of a established credit union adopting or helping kickstart a de novo credit union.
Mhm.
Um, so there are a lot of reasons to do that, and yeah, talk. Why would a credit union want? I think the how is. I think that's kind of obvious, just sharing knowledge and, and making
Mhm.
some arrangement to share systems and things like that. I've also seen mergers of equals where they kind of, the back end is merged, but there's two front ends.
Yeah, yeah,
I've seen that a few times, but like I could really see a larger credit union or an established credit union getting a lot of benefit from starting, some new niches and so forth where they're needed and so forth. So talk a little
yeah.
bit about that.
So there's a couple things that our de novo support group has discovered over this. One, that would be ideal if it's just a matter of getting someone that would put in the work, right? I mean, because it's not
Yeah.
easy. And I wish Jim Blaine could tell us his secret. I'm sure there's enough people that know the story or involved that we could actually get more details on that, which I think would be really interesting. The other thing is if there are small credit unions with a struggling charter. I've seen a couple of those where, the charters maybe needs to be expanded. It's not working for them. Sam Brownell at CU Collaborate, that's his specialty, is working with field of membership charter expansions. And as Sam said, he's worked so closely with the NCUA over the years that he knows how they think. He knows what they will approve, what they won't, or he's learning every day. And so the other thing is we're looking for opportunities where we might take a small struggling credit union that already has an established charter and either build upon it or perhaps tweak it. That's an opportunity. And then I did hear from Sarah Bang at NCUA that if a credit union merges, so let's say the two credit unions merge, like Exceed and Connecta. Um, Connecta is I don't know what the term is, but they're not the winner, but the 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 end of the merger credit union. I don't know what the politically correct phrase is, but the winner. And Exceed, their charter, though, however, still exists, as I understand it. They're
Yeah.
just no longer using it. And so and there's a couple that have, and it's funny, there's a couple that have recently merged that have very broad names kind of like an Exceed. That's kind of a good name, if you will, for more of a broad cause that might be a viable solution. We're going at it from every angle. I'll tell you what, we really are. And that's when I was a filing I3er. That's one of the things I learned from being an I3er is when you identify a problem, come up with a problem statement that begins with how might we? And so we came up with the De Novo support group. How might we help small credit unions start? Not can we, or is it smart, or should we? How might we? Which isn't, we're going to do it. And we're finding all these different ways that we're, and we want that clubhouse. I keep saying that. So if anybody's big QSO wants to help sponsor that for us, listening, that just thinks, I would like my name on that, we'd be happy to talk to you.
All right.
Was that shameless enough? Yeah.
Throwing a little shameless. Yeah. There's you cannot have any shame.
Now, when it comes to this is a worthy cause.
Yeah. And one thing I think it would help. I think it would help me envision things. I think I'm getting the idea. I have a pretty good, strong idea, but I think one thing that would help a lot of people is to talk a little bit more about some examples or some examples of things a de novo could do for a specific audience or a specific group with this, the common bond. What's something a de novo could do that, that a, being seg number 401, could not do. And I can envision quite a few things, but,
and that's kind of tricky. One of the other difficulties in starting a de novo currently with the NCUA charter is they're not allowed to do a lot of things right out of the gate. But and I was talking to someone at the NCUA recently, and we were talking about, does a credit union really need to be full service to survive? I mean, are there enough credit cards out there already? Does a de novo need to have a credit card product? Right?
Yeah, I was really, and that's a point I was going to get to later, is people are frightened of the rise of fintechs. I hate the word, but the financial technology, so forth. But there's also an opportunity in that fragmentation because people. It happened a long time ago with credit cards. People, even your most dedicated members, probably have a credit card somewhere else.
Yeah.
Some credit unions have just dropped credit cards. I've seen several do that. Just
some sold their whole portfolio. Yeah.
Sold it off, or they don't even bother with it. And so there's the opportunity there is to be part of people's lives without having to be absolutely everything to them. Now, and again, you talked in your blog article, which I think was earlier today, maybe yesterday, about that's the myth of the PFI.
Yeah,
that may be changing with technology and with people getting used to having this. They're sculpting their own financial life. As long as you're in there somewhere in a nice central spot, hey, and so that's one thing. Yeah.
Well, and that was what, the CU Insight published my blog today about debunking 40 years of credit union myths.
Yes.
And one of them was there was always this relentless pursuit of being the primary financial institution. And, early on, they were like, you got to get the checking account because then we're their PFI. And I remember even then thinking, like, what guarantee? I mean, it was a little more relevant back then because they weren't able, there was no Google, right? There was no, people didn't have the information that they have today. And so there was more of a tendency to kind of put everything in one place, but that is so not the case anymore, right? I mean, no households don't have the conversation. Hey, honey, where should our primary financial institution be? That doesn't happen.
Yeah.
So it's become this weird kind of credit union goal. And yet if you look back, credit unions weren't even allowed to offer checking accounts until 1975.
Right.
And I started in 80. And so I worked at the Oregon Credit Union League early on in my career too. And, that was kind of like the beginning of checking accounts and credit unions. I bet a lot of credit unions will look back now and say, why did I even add that? It's pure expense, right? I mean, and it's a headache. And then you have to keep adding services to stay in the game. And then it's just, it was not a PFI. It's not a PFI indicator anymore. And I'm a very unprofitable member, I think, at 3 credit unions right now. I apologize to those 3 credit unions, but I am. But it's interesting because what credit unions were chartered to do was to make loans for provident, productive purposes and to encourage people to promote thrift. That's what we were chartered to do. That was it. So if you look at it, if you peel that away, it's a savings and loan, right? We're meant to help members save, keep, financially counsel them, and to live within their means. And when they need to borrow, that we have affordable, fair, accessible lending products for members. And so for a de novo, where they can get into the specialty that I'm learning is if you take those three groups, right? Historically Black, college, LGBTQ, and then previously incarcerated. And you're just going to open a credit union where we can offer savings products and basic loan products. That'll serve all three of those groups really well. But they all have really different circumstances, right? Different needs, different stories, and they don't have to be full service to survive. They just got to get their doors open, right? They just have to get their doors open.
A door.
A door. They have to get the one big door open. And so again, it comes down to that capital raise. And it was interesting today because I love QSOs. That's why I spent 5 years working with NQSO and with the marketing contract, and I got to meet that. I didn't know a lot of that network, and I love QSOs. They're just such a perfect example of the 6 cooperative principle, cooperation among cooperatives. And we've got some big, PSUs, the co-ops, all these folks, I got to meet them, and they're good people. And NCUF, and, I'm looking at like some of the investments that people are making into fintech, and it's all great for the future of credit unions. But then I thought, could there be like, there's credit unions for kids, which I love, big supporter. Maybe there needs to be a credit unions for credit unions, right? Where we have a fundraise, and that, QSOs who have money, they're a for-profit entity, but their QSOs will go away if credit unions go away. If there could be like a credit unions for credit unions where people could donate, credit unions could donate money, because here's the deal. To get the capital, it's truly got to be a donation. But if a credit union needs $1 million, in the grand scheme of things, that's not a lot of money. But when you're a small group trying to raise it by pounding on doors, that's why it's taking 5 years. And they're going to their field of membership trying to get this money. Very few credit unions have, a sponsor that has that kind of cash. They've got sponsors that might give them office space or, some help. But just to flat out say, here's $1 million or $2 million to get you started is again, according to the NCUA, Martha Ninichuk, I talked to her, she's wonderful. But she said that's the heartbreaking part, and we can't really help them with that. So, but if we had like, credit unions for credit unions, if we as a movement, we support NCUF and all those are worthy and wonderful. But I think, if we have this, if we get this clubhouse, unless you can think of a better name, I just keep calling it the clubhouse. But if we get this online community, and maybe that could be it needs to be an element of it. The mentoring, we've talked about that we want 2 types of mentors: professional mentors, executives, CUNA management school folks, DEs. I've reached out to all of them who can just help with policy writing and all the, the nuts and bolts of it. But then we also need financial mentors. And like the Randy Carnes, who's willing to give free services, that is like an in-kind donation that's going to save them money. But we don't have a central place. Have I mentioned that?
Get together. Yeah.
That's our mission right now. We are talking to some people. We are actively, kind of shopping that idea around with some folks. But I do want to say, if anybody listening to this has some ideas to, or some contacts, because I think that's going to make all the difference for this growth. We don't want this to be a one and done. These 3 credit unions, I'm not going to feel like this is a victory when these 3 credit unions get started and then say, look what we did, there they are. It's not enough. We should add 100 in the next 5 years minimum.
Yeah.
We really should.
Yeah. And there's so many, I don't know, I wrote an article years and years and years ago. I wondered when we would see the first credit union start based on some sort of virtual common bond. People who play a game, or people who are into old motorcycles like me. People, and there's a little bit of that when you mentioned the LGBTQ credit union. Obviously, that's worldwide everywhere. But there's something like that. This is a different common bond, different kind of common bond, and so that's that because geography doesn't matter nearly as much anymore. So that's
Yeah.
what's one point in the favor.
Well, and I'll
They're
tell you, you bring up a good point because none of these de novos are looking at brick and mortar,
yeah,
right? Which actually is smart, and that's the best thing about COVID, right? We had to close the doors on the brick and mortar, so we all
yeah,
know.
yeah.
So now
You
what?
had to figure it out. Yeah, and
Yep.
spending money on office space and so forth can that can as long as you have a place for the cigar box, virtual cigar
Right, and
box.
the drawer should lock. I think that was a good point you made earlier. It should be a locked drawer. Well,
At least,
it's so funny because some of those stories, in Los Alamos Schools Credit Union up in Los Alamos, New Mexico, they got a new building and they were always, and they're about 30 million, super successful credit union, by the way, at 30 million. And there's no reason for them to merge with anyone. They serve the Los Alamos School District, which is a fabulous school district. And
mhm.
LA, as we call it in New Mexico, that's our LA. Los Alamos is
Yeah.
a great town. The labs are up there. I mean, it's great. Anyway, he got a new building and they used to be like in the school, and his old office had no windows, had no light of day for like 30 years. So they got a new building and they have windows, and he was giving me the tour and he was so proud. And in this one room was the kitchen table where the credit union started, and they still have the kitchen table. Is that
Oh
not
yeah.
amazing?
Oh yeah. Yeah. The kitchen table, the cigar box, I have
Mhm.
pictures of the a lot of times it'll be like here's the pictures of the secretary or whoever actually took care of the books, and every Friday she'd be
Yeah.
making stacks of cash for people, and it was
Mhm.
yeah it is. And again, that's a totally aside topic, but it is really cool when there's that pride comes across, and it should be carried forward. It should be remembered. It should
Mhm.
be preserved. Um,
One other thing I want to mention about,
mhm,
and this is Juan Fernandez's idea, and I love it, that we had a merger happen in New Mexico this last year that really shouldn't have happened, and it was a very small credit union in very rural New Mexico. Most of our small credit unions here are rural,
mhm.
and when the CEO retired, they had trouble finding recruiting a CEO, and I don't know, what channels they went through. Probably just, board of directors did the recruiting, and they couldn't find anyone, and so they felt like they didn't have a choice but to merge. And this wasn't on Juan's watch. It didn't happen when he was there, but when he came back, he's like, that just shouldn't happen. And yet this it does happen. We heard that more and more we're hearing that story, that a small credit union and a viable credit union feels like they have no choice but to merge because they can't get a CO to move there. And then Juan's idea was, well, we've got all these programs like the DEs, right? The credit union development educators. We've got the crashers. Have you seen those crashers? Passionate kids who want to make credit unions their career, right? We've got CUNA management schools, all four of the schools that have, people in various stages of their career, but that are committed to making credit unions better and their careers. But it's not Googleable. This is one of those other things that if we
Yeah,
had a place where the small credit union could go to recruit,
yeah.
and we're tapping into those groups, right? We're tapping into them. Imagine if we had a system where we could put some young credit union professional in a little $3 million credit union in, wherever New Mexico for a couple years, right? They get because I'll tell you, the small credit union CEOs, those are the real, the real heroes, because they have to do everything. They have to
Oh yeah.
know everything. And they don't have an admin, and they don't have a bunch of departments. I mean, they're opening a teller window, they're doing a loan, they're cleaning out the toilet, they're doing it all. But you learn so much, and that's what I learned at that $4 million credit union, because I did. I had a teller drawer, I did loans, I did collections, which is not advised to do the loans and be a collector, because the first time someone filed bankruptcy, nobody got a loan for a while because I was so hurt. But anyway,
Yeah.
I felt betrayed. But it's you learn so much. So it's like if we had a program where 2 years, or if they decide I want to build this, I want to stay here, I want to build it, or they rotate another person in, and they get that life experience, and then they can move up and get into
Mhm.
management. It just seems like there's such a missed opportunity with all these other wonderful programs that we have going. That's another resource we could tap into to save these small credit unions from having to feel like they have to merge.
Yeah. Yeah. Because you do see, yeah, a lot of times leadership at small credit unions were just the people who were there. And it would be really interesting, yeah, to go out from the other direction. People who have the training and education and, need to go to, they've been to boot camp, I guess, and maybe I don't know, that's a good analogy, but
Yeah.
they,
No, yeah.
rather than,
Just
there's also,
exactly.
there's a lot to be said for learning on the job, but yeah, there's also, yeah, I've heard that a few times where there's a merger because, the leadership is falling apart or left, and, and so we don't know how to run
Mhm.
the place. And it's like, well, there are all these people in training. That's a
Yeah.
great
It's just a
idea.
matter of matching them up. Yeah.
Yeah. And yeah, and again, the $3 million, $4, those the smaller ones and so forth, and it could really lay the groundwork, and who knows, they may fall in love and stay. You don't know.
Mhm. Yeah. You never know. New Mexico's beautiful.
Yeah, it is. I don't think I've been to your area, but I've been to Los Alamos and Las Cruces, and spent a lot of time in Espanola, things like that. So been up and down the.
Yeah.
Okay. Yeah, I think we're probably about out of time here. We've covered a lot of territory, and you've mentioned a lot of names that I need to look up. So I'll probably be getting back with you on some of these. And
Yeah, they are Googleable. You can Google those people.
some questions.
They're all rock stars.
Yeah. And basically, it has been amazing. I think we've covered a lot of territory there, and I really can't thank you enough for sharing your time with me. We're trying to start a de novo podcast, I guess you could call it. So I'm really glad
Right. Yeah.
as soon as I got in hold of you, you were like, oh yes, absolutely, and so forth. You mentioned, you're working for QCash and so forth, and you're pretty Googleable. So just look for Denise Wymore and credit union, and you'll find the right Denise Wymore, I think.
Yeah. I'm on LinkedIn, Twitter, Facebook, Instagram, all those social channels too, under Denise Wymore. I didn't do
Okay.
anything clever, just my name. Yeah.
Yeah. You're pretty easy to find, and so forth,
Mhm.
and so forth. And obviously people can find me and the rest of the iDiz Incorporated gang at cuidiz.com. That's cuidiz.com. We do a lot of blogging. We have years and years of blog articles on a lot of these related topics. Denise and I have bounced ideas back and forth for a long time, and a lot of these things are very close. We're very passionate about credit unions, and a lot of these things are very close to my heart as well. And if anybody has feedback, or if you have good ideas of your own, or you would like to be a guest on Good Ideas, all my contact info is on the website. And I would like to just say thanks to Denise, and thanks to anybody watching and listening,
Mhm.
taking your time with Good Ideas. Let's get out there and let's do good with good work.